just going to get right into it. This video is made for beginner traders that are trying to trade Forex and trying to trade futures. And I wanted to specifically talk about one and two things. The first thing is, if you guys want to hurry up and get right into trading, like what most people say, like, oh, do this and that. The real answer from 6 to 7 years of experience is just focus on market structure and leave everything else. And leave everything else out. So what I mean by that is, if you focus on market structure tells us where to buy and sell because it tells us the trend, right? A lot of people talk about the trend and don't explain of this what makes the trend. Highs and lows in any market makes a trend. Like for example, a high right here, like I'm drawing, that's a high. Now it's a low. Now it's a high, right? Now it's a low. And this pattern that I just created makes it look like it's going up in an uptrend. The highs and lows are what you want to kind of master, because when you master those highs and lows, it shows you your trading range. Now, I don't mean by like range sideways. I mean by, let's see, your high and low of price. So if we're in a bullish market, your high of price is going to be here and your low of price is going to be here, right? So what you guys need to understand is that if you're buying, you want to just basically be buying between if you're buying, you want to basically be buying in between the low, which is here, right, and the high, which is here. So that's what you're going to be looking to actually trade, and that's where you're going to be looking to find your specific trade setup to actually make money trading. So the money doesn't really come until you start identifying market structure and getting used to that and getting used to understanding trends, because when you understand trends, you understand basically supply and demand as a technical analysis trader. So this is basically what my teacher taught me, and what I'm basically making this specific video about is break of structure and market structure. But I'm more going to be talking about break of structure because if we look at the screen here, we can see that we have a high and we have a low here. And so it looks like in the past that we were bullish, right? Because we had a high. I'm going to actually circle them so you guys can actually understand it. We had a high, which was right here, and we had a low. Sorry, I'm just deleting this, which was right here, and we had a previous low, previous high, right? And all these highs and lows make the trend up, like I was just saying, and we were bullish right here. But most people would see this new price action, which is right here, and they would assume that because that's happening, that the trend is changing to that the trend is already bearish. Now, yes, the trend could be changing, right? But the trend hasn't fully changed yet. So what you need for an actual trend shift is you need more than just a break of structure, which is this. The structures are your highs and lows are your highs and lows of a trend, which are the circles that I circled. That's your structure. That gives the trend structure. But when price breaks that, right? When price breaks this, that is a break of structure. Now, that doesn't necessarily mean that the trend is changing. That could just be price retracing itself to a lower price level on a different time frame, such as a higher time frame or a lower time frame, and then price can just keep going up like that. So to avoid losing and getting confused by this, what you need to understand is, here's my secret. So when price breaks structure like that, because this high that I'm circling, I'm actually going to change it into red. That red circle is the new low, because all the other previous lows that were blue circles were all in a rhythm, and that rhythm was going high, low, and so all the circles get higher. But until we see, I'm going to change it back to blue. And all right, so pay attention. Until we see price come up, right? Price is right here. Until we see price continue to go down, we're actually not going to be looking to take any sells. We're actually not going to be looking to take any sells until that happens, because then we have a confirmation of supply being greater than demand. Because when supply is greater than demand, prices decrease from expensive prices to lower prices. It's like if you were trading an Apple stock and the price is at 100, the price is decreasing to like 90 to 50 to 20. And so this is a real price decrease when we have a total of 4 pieces of structure. that is our new trend. If that happens, then I would look to take sells. And so since that hasn't happened yet, I'm actually going to what I'm going to really do in real life, not an example, because I'm actually planning on trading this. This is gold we're looking at. Until we see that happen, I'm just going to be paying attention what happens in between the two red circles that I'm about to draw. So the first red circle technically is already drawn, which is the one that you see below, and I'm actually going to draw another one. So those two red circles are our range, the high and the low. We're not basically paying attention to anything else but that high and the low. So if we have some new demand that comes in and breaks either above that high, right? If we have any new demand that breaks above that high, I'll most likely trade that. And the reason why I don't need that down movement and up movement is because the trend was initially bullish, so it could be continuing. And also the fact that if the trend was switching to bearish, I'm pretty sure it wouldn't go all the way up there and then it usually doesn't go all the way up there and breaks that and then goes down. Now that could happen, but that's really rare. Everything is really specific because the banks and institutions are the ones that trade these markets that have the most capital. So I realistically they would be going up to fill in inefficient price action through that gap right there. And we'll get into the gaps in another video. And let me just make the screen more easier. So I'm getting rid of the red line, and basically the banks and institutions would be trading towards that gap, and then they would actually change the market. So if they really wanted the market to go down and then there was more supply that's greater than demand, the market wouldn't rise. And that was the point I was trying to make a moment ago, is that when supply is greater than demand, it's not going to break that high. It's going to just go here and go back down. That's how you know supply is actually in the market. That's why people talk about supply and demand. So supply and demand is just a translation of money into a market. And I don't really use any indicators. I use the volume chart to show me a direct example of supply. So if you see here, I just turned the volume chart on and we can see these, I call them towers. So all these, it's like imagine being in a city, right? It's a dope ass city. It's like the metaverse or some shit. And these highs that I'm drawing in red circles, these are like the highest towers. So the highest towers in like a movie, right, or a TV show usually mean that the person that owns the tower has the most money. They have a lot of money. It costs millions of dollars. And so that could be, that same concept can be applied here because these towers represent money, volume. Volume is a translation of money. So right now the market is very, very supply dominated. So I actually would not be looking to trade now. Now you could go, we're on the 4 hour, let me just tell you that. So you could go to the 1 hour, the 30 minute, or the 15 minute, and you can trade on the short term, but that's not usually what I do. And yes, I'm sorry, and no, I don't trade on the 4 hour. I use the 4 hour just for my long term analysis to see where price is actually heading to so I can understand the lower time frames. So right now, my plan for gold is I'm going to zoom in. You see that blue box that I just drew? I know there's a lot of crap on my screen, but you see that blue box that I just drew? So that blue box, once that represents a supply level because that's where price was falling from, right? Because if we go and we go to the let's just go to the 4 hour. If we go to the 4 hour and we zoom all the way in, sorry the fucking chart's all laggy. If we zoom all the way in and we take this little arrow here, we can see that, okay, price was all normal up here, right? This was all normal. And then all of a sudden we have this drop right there. It starts dropping and dropping. That's supply. And not only do we have the candles that show us that, if you look at the bottom of the screen, look at the red that slowly increases, right? It's building momentum. So that's still a supply dominated market. So I drew this blue box to represent um, the actual supply level from which price fell from, and also that's where the money is at right now. So if the market breaks above that blue box, right, this supply zone, that means that there is more demand than supply. And I'm not going to overcomplicate it. That's all I do. And so if I see price break above that, I'm most likely going to trade gold, because if supply, let me tell you again, was really dominant, the market would just reverse off of that entry level, and then we would just trade that. And so that's pretty much all I have to say in this video. I'm not going to go too in depth. I want every single video I make to be really simple for you guys, because this is mainly for beginner traders. The experienced traders, you guys already know this. You guys already know about fair value gaps and order blocks. But I'm going to just make videos about market structure for a while until you guys understand it. And then when I start seeing comments, okay, move on, we want to learn about the fair value gaps that you trade in the order blocks, then we can go on to that. But this is pretty much what I wanted to let you guys know. I do have a Discord. It's not fucking $1,000. It's not $97. It's literally $49.99 a month. I have access to like my trade setups, the community, and I also have what's called a chart gallery where you can literally just see the examples. Because I know when people are studying and you join courses and groups, there's not really, you need to actually look at examples that, and you need to match your charts to my chart so you can see the difference and you can actually learn it. And so I'm all about people actually learning the information. So every example of everything I trade, they're actually displayed in the chart gallery. So whether that's market structure, fair value gaps, order blocks, and fair value gaps and order blocks are the only two trade setups that I trade for you guys wanting to know and do some research on that yourself, or if you're familiar with it. And yeah, that's it, guys. I have Instagram if you guys have any questions or comments. I hope this video was helpful.